After weeks of subdued movement, volatility is finally starting to make a comeback, but not where you might expect. I'm Johanna Bota, and joining us today is Alex Ridgers, StoneX's Vice President, Global Head of Retail Dealing Desk. Welcome back, Alex.
Hi, Johanna.
How are you? So, let's start with what's moving the market and where the volatility is building.
Well, yesterday we saw the big move was copper, down 22%, which I mean in anything is dramatic. And it was interesting that the headlines were all about Trump's 50% tariffs caused copper to crash. But actually, when you look at the detail, it was almost the lack of tariff that caused the crash. So over the past few months, CME warehouses, basically traders have been building up big copper supplies. The idea being that as soon as tariffs hit, there's going to be a supply shortage. But what we saw is Trump is saying, I'm going to tax anything that's already made into wires, tubes, basically post-manufacturing. But anything that's sort of coming in its refined state that needs US manufacturing, sort of US production, that hasn't got a tariff. So all of a sudden, we've seen supply basically unchanged, but we've got this big glut of just sitting in warehouses that's going to flood the market. So now we've sort of seen that return to sort of global price levels.
Okay, so that's the macro picture. We're also in the middle of earnings season. So what are we seeing there?
Yes, well, so far we've almost had it's been a bit of a damp squib. I mean, if you look at the long-term graphs of the NASDAQ or, I mean, any major US index, obviously we had lots of volatility in April, May, etc. But when we look at the daily ranges, they've absolutely collapsed. So we've almost this sort of triangle shape from big daily ranges, not necessarily driving movement. It could be up one day, down the next, but just this narrowing of the daily range to almost like the idea of being a coiled spring. So I think yesterday we finally saw a bit of a release of that spring. I mean, I was expecting it to be from US GDP. Just US GDP results are normally huge, and as it was, we saw a massive rise from 2.4% to 3%.
So what stood out in the numbers?
Well, that was it. I mean, so after the US GDP results, the market was flat, and so it's almost like, well, it moved afterwards. It moved at 9 o'clock. So it seemed to me to be Meta and Microsoft results. So when we're talking sort of looking in the detail of that, when we're looking at Meta, they've spent absolute fortunes, and I think their plans are to spend like $60 billion investing in AI, and they're all talking about $100 million bonuses, sign-on bonuses for some of their top AI sort of recruitment. So I think the market really wanted to see sort of some AI growth, maybe not in revenue because that comes after, but actually in almost the client uptake of that. And I think they seemed very successful.
What did we see with Microsoft?
With Microsoft, the particular thing that all I can find is its cloud growth. There's this thing called the intelligent cloud. Again, it's sort of linking a little bit. It's still cloud tech, but it's got a bit of AI in it. But that 26% growth there was for investors. They're seeing that as sort of the future and the success. Okay,
so what do we still have coming up? Because I know Apple and Amazon are coming out later on today.
Yes.
What can we expect there?
Yes. Also, of course, so I think it's going to be huge. So with Apple again, it's when we're looking at recent performance, it's in the bottom 15 performers of the Nasdaq 100. So pretty much doing terribly. And we're sitting right in the middle of the 52-week range, which if you look at the graph of the Nasdaq, you're at the top of the range, not right in the middle of it. So I think they're predicting sort of 2.4% earnings growth, and I think 3.9% revenue growth.
Yeah.
But deeper behind that is actually where that growth is coming from. iPhone sales have basically stalled. And again, I think for traditional Apple investors, that's a real worry. So where they are predicting more growth is in their sort of services. So we're talking about Apple TV, Apple Music, cloud services again. So that's looking for double-digit growth. So I think regardless, almost more than the actual earnings themselves, it'll be how is that cloud services sort of, also that services in general doing.
And what about Amazon?
Well, we saw, again, as I said last night with Microsoft results, it all being about their intelligent cloud. Who is the biggest in cloud services worldwide? AWS, Amazon is the big. So whatever I think the overall Amazon results are, whatever it is from its sort of other lines and Prime, etc., it's all going to be focused on the cloud services. Okay. And I think what we've seen elsewhere, talking about, again, the underperformance of the iPhone sales, is we saw Qualcomm results come out. Now, they're the biggest supplier of chips into phones.
Yeah.
Disappointing results for them. They sort of dropped quite significantly. And I'm really seeing that switch between hardware and software. I think, we've seen it over the years in the past where, Microsoft was so successful where everyone else, like IBM, was focusing on building computers. Microsoft came in and said, look, let's be the software, sorry. And we've almost seen in the past sort of decade that move back where it's Apple going, no, actually, their money is in the hardware. And it just seems to me now we're drifting back into that sort of software zone.
You mentioned earlier that the US GDP was not moving the market. Why is that?
Yes, I mean, it was a bit of a surprise to me, and again, sort of had to think and delve into that. As I said, 2.4% expected, 3% revealed. So I think it's almost a mix where investors have gone, well, this is good and bad. 3% growth is good for future earnings growth. People are richer, more money to spend, more money floating around the economy. But at the same time, it's really put a sort of a hard stop on future rate cuts. So I think we're predicting one rate cut before the end of the year now. So yes, yeah, exactly. So we're down that low for the US anyway.
Yeah.
So it's really been a sort of balancing act where one good, one bad.
And where's gold standing?
Well, I mean, as I was talking about, from the GDP, we've seen a real dollar strength on the back of that. And actually, we've been seeing it in the last week or so, where everyone's realizing maybe the world isn't in such a bad place after tariffs. So it's funny, I read a lot of journalists and they're still going, oh, well, the fact that gold is so strong, it must mean recession is coming, and that sort of lag is still happening. But actually, when you look at gold in sort of real terms, now the dollar strength is coming back. If you look at gold in euros, valued in euros, it's completely stagnant. Now, this to me is probably a signal that actually that idea of people trying to predict a recession from gold strength going away because the recession, that strength's gone because the recession sort of fears are also going away.
It almost feels like that doesn't apply anymore since all the changes that happened earlier on in the year with the way gold behaved.
Yes, exactly. And so it feels in a way for commodities on the whole that there's just that sort of bit of a lull really.
Yeah.
Where, we said copper's dropped, gold is stagnant, down in dollar terms, but stagnant in other terms. And when we're looking at crude oil, there's so much supply coming from so many regions now, and as shale gas supplies are being turned off because there's such a glut of supply in the Middle East. Gold is sort of fairly stable in the sort of $65 to $70 range. That at the moment, that commodities focus, I think, is probably just dying away a little.
Okay, so let's wrap it up then. Where is volatility heading?
Yes, again, so from what they're seeing, it seems to me as though commodities volatility is down, and I think again that index volatility is going to be the sort of the big one. I was just talking about that coiled spring effect where you can't keep going to lower and lower ranges. Eventually, there's a big breakout. Now, I'm not saying whether that's going to be up or down.
You're usually so optimistic.
Well, that's it. That's the $1 million question that we'd all love to know the answer to. But I can certainly see that. Again, it's that there's going to be some volatility in indices. Just don't know where it's going to come from. And my one sort of thing is, I think when we look back, a few years ago, everyone thought the metaverse was going to take over. It was going to be the new thing where everything's going digital online. And of course, that didn't happen. But in recent moves of saying, that real focus or sort of towards software against hardware, it seems like that sort of new digital era is going to be, playing out again. So I'm spending sort of what should be quite a quiet August, almost deciding which of the stocks that are going to thrive in sort of this new AI software world. Yeah.
Great. Alex, thank you so much for joining us. And thank you for watching. For more financial content, don't forget to like and subscribe to our channel.